What's up, guys? Rob Jones with Deerwood Capital. I'm going to start talking about the Wall Street Journal, what I read every morning. This is just the business and finance section, and pick out a couple articles. In today's paper, I read a couple articles, and through it, I found a consistent theme. One is the wealth effect. All right, I have a couple of videos talking about the wealth effect. Basically, it's when all your asset prices fall, then you feel more poor and you spend less. So stocks fell 20% and other individual stocks fell even worse. And they got to a bottom really at December 26th. Now, everybody thought earnings were a reason for maybe the market selling off because the market's always smarter than anybody. And only a few people have been able to beat the market or outsmart the market. But what's interesting is that in these previous earnings announcements, JP Morgan CEO Jamie Dimon, the CEO from Citigroup, I forget his name, they come out and said the economy's well. Jamie Dimon kind of pointed to student debt as being too loose, but other than that, he doesn't see anything like 2007, 2008 happening again. Now, the CEO from Citigroup was quoted in the Wall Street Journal and said, "This is the first recession that we may talk ourselves into." So just the mere talk about it and looking at the stock market and how it's reacting, and then you spending less as a result, going back to the wealth effect, is going to cause a recession or can cause a recession, which is true, okay? So what I want to talk about in today's paper is the banks reporting, okay? There's headlines all over that say American Express reported record profits, MX results cap a record year, Key Corp earnings jump at regional banks, M&T Bank net income rises 69%. So the banks, the economics of the banks, the business is doing well. They don't see anything. The Delta Airlines and United Continental Holdings, they have here that business bookings, large corporate accounts, and travel agencies were up 11% in the first week of the year. Delta estimated that the shutdown will cost the company $25 million in January, contributing to the weaker first quarter expectations. All right, so that's what I got highlighted down here. And I'll get into the government shutdown in a little bit. But let me continue pointing out a couple things about the wealth effect, like this great one here. The booze makers turn to soft stuff. Okay, I didn't really know what that was, and I read it just for fun. But in it, I found a quote that was hilarious, right? Basically, it talks about the trend of how millennials and the generation, my generation, doesn't drink as much alcohol as the previous generations. And overall, alcohol consumption is falling. But when Americans do reach for a drink, they are increasingly shelling out for premium and small batch spirits over everyday brands, much as craft beers have eaten into national brands' market share. I said, no, that's not what's going on. Like, we've just been in a 10-year bull market, 11-year bull market, and everybody feels more rich, so they're spending more. If things turn around, then I'm sure tastes will change and people will start drinking Bud Light, Coors Light, Keystone Light, Natural Light, like all of those again. So I think that definitely is the wealth effect in reverse, right? We're talking about bull market for 10 years, assets rising, stocks rising. They're going to spend a little more. That makes sense. But that still holds true for the reverse. All right, so I think I nailed everything there. The only other thing that I could have pointed to was that the treasuries fell after solid data that was better than expected. So this data was purchasing and producer indexes, like how much businesses order from producers, and that came out better than expected as a result of a good economy. So again, not really finding what this recession and earnings and market crash is really coming to. And then I saw today the U.S. Michigan Sentiment came out. So basically, it's a survey done by the U.S. University of Michigan, and they ask a certain amount of people, I don't know if it's 100, 1,000, what their feelings are. So it's a sentiment survey, and it came out 90.1, if I'm not mistaken, and it was expected to be 96.1. Previously, it's been 98. So I'm not 100% sure with the numbers. I think 100 is the best. They maybe ask 100 people, poll them what they think about the future of the economy, and try and get a sense of what the consumer is feeling and how much they'll be spending as a result. But I don't really take too much, I don't really put too much into those surveys because we're all human and emotional, and we're looking out forward when the market's already discounted all of that, and now that the earnings are coming out, it's not as bad as I think the market had thought in December when it crashed 20% or came down 20%. Okay, so the next topic, and the way I'll segue this, is a nice article from the U.S. economy flying blind. So this is how we're getting into the government shutdown. And basically, it's saying, it's saying, so this is somebody writing this. This is somebody in the media. I'll give you his name. Maybe it's on the back here. Okay. The U.S. economy is flying blind. Who wrote this? Justin Lahart. Thanks for that, Justin. All right, so we got all the businesses, CEOs, managers at Delta Airlines. Even, if you look at that beer report and say, yeah, that's a wealth effect. We got the real economy, businesses reporting pretty good results. And then you have this media, Justin Lahart, trying to get publication and saying, first, one has to assess how much government spending will be curtailed by the furloughing of about 380,000 federal workers and the direct effect of those curbed costs. Next, consumer spending might cool as those furloughed workers, along with about 420,000 workers on the job without pay, strain to keep up their bills. Fewer government workers and contractors are flying, and other travelers might be foregoing trips rather than deal with checkpoint delays stemming from transportation, security administration, staffing woes. All of this is happening as worries over the U.S. economy already were growing. It is hard to know how lower confidence might still affect business. So, complete opinion. He brought up a couple good facts, which are true in the sense that there are people not getting paid, and it is affecting our economy. All these economists may throw some numbers around about how much it'll affect us, but I don't care what I think. What I think is Trump will control anything that he wants. So let's talk about the risks for the stock market. The shutdown, okay, Trump can shut that down. Chinese trade, Trump can control that. The only thing is the central bank. I don't know if his pressure, he's certainly trying to control the central bank. I don't know if it's been working. So we'll just have to see what Jerome Powell does, who is the head of the central bank, because if he continues to raise rates, then I think the market will naturally fall over time. And if you look at any recession in the past, I think it's always been preceded by raising of interest rates. So while you raise interest rates, it acts like gravity on the valuation of stocks. So that's why they say if the Fed's raising rates, the market freaks out and sells off a bit. Now, Trump trade, Trump Fed, and the shutdown. Okay, I hit everything. The last thing I was going to talk about was China. There's a couple articles in China about the consumer spending, but not spending on luxuries and expensive goods. They're spending on, like milk and coats and clothes, like consumer staples. So that's another thing pointing to the wealth effect, kind of looping in this whole video, is the Chinese economy, the stock market, not the economy, the Chinese stock market has fallen off since January, and it's probably down about 20% still. And so the owners of those stocks, which are Chinese people, probably feel, especially the rich, probably feel less rich and are buying less expensive goods, but everybody's still buying these consumer staples. And the article goes on to say how the stock's been jumping rather than the luxury good stocks falling off a cliff. And that goes to point that this wealth effect is real. I don't know if it's going to come to fruition, that we do start to see less consumer spending. We've already seen it in China with less demanding iPhones and Chinese people spending differently and imports coming into China being less than expected and less than previous. But that all again goes to the trade tariff situation. The U.S. doesn't really, no, we do import a lot from China, but we had that tax break, so we had a whole lot of more money from a consumer's perspective in 2017 as compared to 2016. So then we could spend and it didn't affect our economy. Now, since we don't have that sugar rush for 2019 and we do have a 20% pullback, now it's come back a little bit off the lows, but we still have that uncertainty in the stock market. Maybe we'll see that in Q1 or Q2 of 2019 as far as consumer spending. But I think the answer, or the question rather, is what's Trump going to do to control China trade, shut down, and then what's the central bank going to do? All right, guys, so I hope you enjoyed that. And I'll try to be doing this every day because I read the Wall Street Journal every day, and I'll try and post it earlier in the morning. Thanks, guys.